This conference will now be recorded.
Hello guys, very good evening for all of you. I hope you all are well and doing good. So guys, am I audible for all properly? Is also my screen visible for all? Please confirm in the chat box. All right, great. So guys, in the last session, we have discussed some topics like about Tally Prime we have learned, the basics of accounting we have discussed, accounting terms we have discussed, and then types of account. So if you guys have any doubt, any query, any kind of confusion from the last session, these four topics, then please ask. All right, then let's see the today's session topics. In the today's session, we are going to discuss about the golden rules of accounts, journal entries, and some financial statement reports. So let's get started. Here, guys, the first terms come the debit and credit. We have to know what are the debit and credits. Basically, we represent the debit by DR and credit by CR in the accounting. Debit credit means you can see plus or minus in the accounting. Okay. How? If your asset and expense are increasing, we have to debit those. But if our liability and income is decreasing, we have to debit. So if our asset is increased or the expense as well, we have to debit that asset or the expense. And also, if our liability and income is decreasing, we have to debit that. Then next comes credit. Credit means if your liability or income is increasing, you have to credit that. If your assets or expense are decreasing, we have to credit. We will see some examples of the transaction entries so that you can know how the debit and credit works. But before that, we have to discuss about the golden rules of account. So guys, if I talk about the golden rules of account, golden rules of account basically help us to pass our transactions journal entry in the accounting. How they help? It is very simple. Let's see. Golden rules of account basically divided into the accounting types like personal, real, and nominal. These three account types have their different rules of golden. So what they are? Personal account golden rule is debit the receiver and credit the giver. We have to debit the receiver and credit the giver. In personal account, what comes? Persons, companies, debtors, creditors. So if any person is receiving something, we have to debit that. If any person is giving something, we have to credit that. Simple. And the real accounts say debit what comes in and credit what goes out. If any asset is coming in, we have to debit that. If any asset is going out, we have to credit that. Nominal accounts say all expenses and losses we have to debit and all income and gains we have to credit. My screen is visible for all of you, correct? Alina, you are saying you are not able to see anything. If you are not able to see anything, kindly rejoin. After that, maybe you will get. So guys, kindly have a look on the golden rules of account. If you want to note these points, please make notes and also ask your confusions if you have. All right, guys, now let's see some examples of the transactions so that we can know how we have to pass the journal entries with the help of golden rules of accounts. Here is your first transaction entry. It is saying paid rent of rupees 5,000 in cash. So we have here a transaction. In this transaction entry, you see one expense is given and one asset is given. Rent is an expense and the cash is an asset. Okay. So as per the golden rule of account, expense go for the nominal account, and nominal account rules say debit the expense, credit the income. So rent we have to debit here. And if I talk about the cash, cash as an asset, asset go for the real account, and real account rules say debit what comes in and credit what goes out. So if we are paying something in cash, so our cash is going out from the company, so it will get credit as per the real account golden rule. So basically the transaction entry for this this one will be rent account debit to cash account by rupees 5,000. So basically by this way, we have to pass the transactions journal entry by using the golden rules of account and the types of account. If you guys have any confusion in this, please ask. The next transaction is paid to Mohan rupees 2,000. In this transaction, if you see, only the person name is given. Basically only the person name is given here, but no payment method is given. We are paying but don't know how, by which method we are paying. So if in your transaction entry the payment method is not given, we have to consider that payment in cash. So here we are paying to Mohan by rupees 2,000 in cash. Okay. So cash is going out, no doubt it will get credit as per the real account golden rule. But what about Mohan? Mohan is a person here. Person go for the personal account, and the personal account rules say debit the receiver and credit the giver. So Mohan is the receiver here because we are paying amount and Mohan is receiving. So as per the personal account golden rule, we have to debit the Mohan. So in that case, the transaction entry, journal entry will be Mohan account debit to cash account. Is this entry clear for all? If you guys have any confusion, you can ask. Which screen, Elena, you want to see? All right, great. The next example, paid telephone charges rupees 450. Alina, you are the only person who is not able to view my screen, because all the students are getting the screen, but I don't know why you are not getting. Kindly switch your system. Okay, if you are taking the session on the mobile phone, kindly use laptop or PC. Or if you are using the laptop PC already, kindly switch to mobile.
हाँ होता है मेरे मोबाइल का
Kindly
इलाज
switch
है
your device. Maybe there is something issue in your device. All right. So here is the transaction paid telephone charges rupees 450.
नेटवर्क पुअर है
In this transaction entry also the
वो
payment method
पता
is
है
not
दिखता
given.
नहीं
So we
है
will consider this in cash. So what we are doing, we are paying the telephone charges. Telephone charges is the expense. Expense go for the nominal account, and the nominal account rules say debit the expense, credit the income. So telephone charges we have to debit here, and as we are paying the amount through the cash, so cash we have to credit. So the entry will be telephone charges debit to cash by rupees 450. The next transaction is paid salary by rupees 15,000 by check. So in this, salary is an expense for us, and check, if we are paying by the check, the amount will go from the bank account. So that's why. So salary is an expense, so it will get debit as per the normal account rule. And bank we have to credit here because it's an asset and asset is decreasing. As per the real account rule, debit what comes in, credit what goes out. So amount from the bank is going out. That's why bank we have to credit. Entry for this transaction will be salary account debit to bank account. Is this entry clear for all? If you guys have any confusion, please ask. The next transaction is receive commission rupees 1500 in cash. So here this time we are receiving. So commission we are receiving. So commission will be our income. We are receiving by cash. So cash will be our asset. So cash is coming in here. So as per the real account golden rule, we have to debit what comes in. So cash we have to debit, and the commission is our income. As per the normal account golden rule, we have to credit the income. So transaction journal entry will be cash account debit to commission received by rupees 1500. So is this receipt entry clear for all? I hope guys you are relating these transactions journal entries with the golden rules of account, how we have to pass these with the help of golden rules of account and the types of account. The transaction entry will get very easy if you connect with those. The next is here paid wages to Mr. Kumar. This transaction journal entry, guys, you please type your answer in the chat box for this paid wages to Mr. Kumar transaction. Please type the journal entry what you think about this transaction. Connect this with the golden rules of account, then let me know. So guys, I have received your answers for this transaction journal entry, but most of the answers are incorrect. Only few are correct. Basically, this type of transactions considered as a special case because if you see here, the wages is an expense for the company and Mr. Kumar is a person. So with expense and person, both names are given and the payment method is not mentioned here. If the payment method is not mentioned, so we consider transaction in cash. Okay, so we are paying cash to Mr. Kumar of wages. But you have to remember one point, you can note that point as well. If any transaction contains the expense and the party name both, we will not record the party name. We will record and mention only the expenses. So for that reason, the transactions journal entry will be wages account debit to cash account. I'm repeating the lines once again. You can note that if in any transaction expense and party account both are given, if in a transaction expense and party name or account both are given, we will record only expense. We will record only expense. For that reason, guys, this transaction journal entry will be wages account debit to cash. Is that clear for all? If you guys still have any confusion, you can ask. Yes, if the payment method is not mentioned, we will consider that payment or that receipt in cash. But if it is mentioned by you have paid or received the amount by cash or by the check, so in that case, the appropriate mention account will go. But if it is not mentioned, we will consider that in cash. The sentence was, if in a transaction expense and if in a transaction expense and party account both are given, we will record only expense. We will record only expense. Now is that clear for all? All right, now let's see some other examples. The next is here, deposit cash into bank rupees 1000. This time if you see this, look at this transaction, in this transaction we are depositing, we are not paying anything, we are not receiving anything, we are depositing. The cash and bank both are assets in this transaction which are given. So these type of transactions, when we deposit some amount into the bank or withdraw the amount from the bank, are called the contra entries. These type of entries are called contra transaction entries. If we are depositing anything or if we are withdrawing anything from the bank, so this will call the contra transaction. The transaction entry is very simple. Just relate this with the golden rules of account. So cash, if we are depositing, means the cash is going out from the our end. So if it is going out, we have to credit that as per the real account golden rule. And the bank is receiving the amount, so in the bank the asset is coming, so that's why bank we have to debit. Bank account debit to cash account will be the entry. Bank we have to debit and cash we have to credit. Is that clear for all? If you guys have any confusion or question, please ask. Waiting for name. All right, I'm explaining that once again. Basically, in any transaction, if you see two assets are given, like cash or bank, and it's a deposit or a withdrawal entry. So if we are depositing the cash into bank or if we are withdrawing the cash from the bank, these entries are called contra entries. The entry is very simple. Cash is going out from our end, so it will get credit as per the real account golden rule, and bank is receiving the amount, so in the bank the amount is coming in. So if the asset is coming in, we have to debit that as per the same real account golden rule. That's why the entry for this transaction will be bank account debit to cash account. Bank we have to debit and cash we have to credit. Waiting for name, is that clear now? All right, now the next transaction, and withdraw cash from bank rupees 500. This transaction journal entry, please type, you type guys the answer in the chat box for this transaction. Let's see how you have understand that. All right, I have received your answers. Few are correct and few are wrong. Let's see. We are withdrawing the cash from the bank. So cash is coming in. If we are withdrawing, it means the cash is coming in. So if the cash is coming in, we have to debit that as per the real account golden rule. And the bank, from the bank, cash is going out. So for that reason, bank we have to credit. So the entry will be cash account debit to bank account. Cash we have to debit and bank we have to credit. Is that clear for all? Especially for those who typed the wrong answer. All right. The next entry is commenced business with cash rupees 4 lakhs. Yes, the withdraw cash from the bank. This is also a contra entry because we are withdrawing from the bank. I have told you that depositing amount into the bank or withdrawing amount from the bank, these entries are called contra entries. Any transaction which is happen only between cash or bank, this is called the contra entry. It is simple. The next entry is commenced business with cash rupees 4 lakhs. So these type of transaction entries called guys business start entries. Okay, because someone is starting the business means the owner is starting the business. So any amount if owner is invest in the business, we all know it is called capital. So for that reason, capital we have to credit in these type of transaction entries, and the asset which the owner is introducing here, we have to debit that because asset is coming into the business. For that reason, cash we have to debit here and capital always we have to credit in the business start transaction entries. So commenced business, introduced in business, started business, all these kind of entries, capital we have to credit. Just remember, because capital is that amount which is invested by the owner into the business, and that asset which is owner investing, no matter it is cash, bank, furniture, whatever it is, we have to debit that because that asset is coming into the business. So cash account debit to capital account will be the entry for this transaction. If you guys have any confusion, you can ask. All right, explaining that once again. The transaction entry here it is commenced business with cash. Commenced means it is starting. Okay, it can be written here started business with cash, introduce cash into the business. It can be any type of pronunciation. So these entries are called the business start entries, and in all kind of business start entries, capital always have to credit because capital is that amount or asset which is invested by the owner into the business. This we have discussed in the last session. What is the capital? That's why capital we have to credit here because capital also a liability. If liability increase, we have to credit that. Okay. And cash is coming into the business. For that reason, cash we have to debit here as per the real account golden rule. Now is that clear? If you guys still have any doubt, you can ask. All right, great. Now let's take a look for the next. purchase goods for cash rupees 6,000. So this time what is going on? We are purchasing now. We are purchasing goods. Goods means the stock items. And we are purchasing in cash means we are paying the amount by the cash. So purchase is an expense for the company. We will treat that as an expense. Expense go for the nominal account, and the nominal account rules say debit the expense, credit the income. So purchase we have to debit, and cash. Cash is going out from the company. For that reason, cash we have to credit. The entry will be this one, purchase account debit to cash account. Basically, purchase nature is the debit balance. If it is purchase return, it will get credit. I will tell you all those natures as well later. Here you have to remember one point. If you are purchasing the stock items or the goods, basically those products which you trade with those. Okay, you again sale and purchase, again sale and purchase. Those called the trading goods. So if you are purchasing the trading goods, so we don't have to mention the goods name in the journal entry. But if we are purchasing any fixed asset, we have to mention that asset name. Just remember this point. The next entry is here, sale goods for cash rupees 7,000. This time we are selling. If we are selling in cash means if we sell something, we will receive payment for that. So we are receiving the cash here. If cash is coming into the business, we have to debit that as per the real account golden rule. And sale. Sale, if we are selling, we will get the amount. So sale we can treat as our income. So as per the nominal account golden rule, we have to credit the income. For that reason, the entry will be cash account debit to sale account by rupees 7,000. So guys, are these two entries of sale and purchase in cash clear for all? If you guys have any doubt, confusion, you can ask. All right, great. The next entry, purchase machinery for cash rupees 3,000. This transaction journal entry, guys, please you type your answers in the chat box so that I can see how you have understand the points. All right, let's discuss this transaction because few of the answers are correct and few of the answers are wrong. So guys, as I have stated earlier, if we are purchasing the trading goods, don't have to mention the goods name. The entry we can type easily purchase to cash or cash to sale, whatever it is. Okay, but if you are purchasing or selling the fixed assets, you have to mention that asset name in the debit or in the credit. So as we are purchasing the fixed asset machinery is a fixed asset here. So if asset is coming in, we have to debit that as per the golden rules, and the cash is going out, so cash we have to credit. That's why machinery account debit to cash account will be the entry. You can note this line. If we are purchasing trading goods or selling trading goods, please note that point, especially those who have typed the wrong answer. If we are purchasing or selling the trading goods, if we are purchasing or selling the trading goods, we don't have need to write the we don't have need to write the goods name. We don't have need to write the goods name in the debit or in the credit. In the debit or in the credit, but I am writing that statement, you can note. So here it is, guys. You can please note that. Great. Now I hope that is clear for all of you. So guys, these transactions journal entries we have discussed here for your examples. And we have passed all these transaction entries with the help of golden rules of account and the types of accounts. So any kind of transaction entries which we have to pass as a journal entry in the tele software or in the manual accounting, we have to just follow these methods. And we have to remember all these points as well. If you guys still have any confusion in any of the transaction entry, then you can let me know. You can have a look on these and ask your query if you have. All right, guys, I'm showing you some natures here. You can note those. Here are some like purchase always have to debit, purchase return always have to credit, sale always credit, sale return debit. If asset is increasing, it will get debit. If asset is decreasing, we have to credit. If liability is increasing, we have to credit. If liability is decreasing, we have to debit. Capital always have to credit and drawing always have to debit. If you don't know what is a drawing is basically that amount or asset which is a withdrawal from the business by the owner. If owner is withdrawing any amount or the asset for his their or her personal use, that is called the drawings. So you can also note these points as well. If you have any confusion in any of the point, you can ask. Liability increase. If any liability is increasing, we have to credit that. Like suppose, for example, let me tell you one transaction entry. Suppose company has taken like this type of transaction. What is going on here? Company is taking the loan of rupees 40,000, for example, from Yes Bank, and amount is receiving through a check. So what will be, guys, journal entry you pass for this transaction? In this transaction, the liability is increasing. Okay, because the company is taking the loan, so the liability of the company is increasing here because we have to repay that loan amount as well. So that liability is increasing. So loan from Yes Bank, we have to create as the account, and this account ledger we have to credit because it's a liability for us. And we are receiving the figures by the check, so that will go for the bank account, and for that reason bank we have to debit. The entry for this transaction will be bank debit by rupees 40,000 to loan from Yes Bank by rupees 40,000. This transaction entries will go. Loan from Yes Bank will be our liability, and in this case liability of our company is increasing, that's why we have to credit it. The same it is mentioned here. Is that clear? All right. So guys, I hope you have noted all these points. Drawings are basically those, if company's owner is withdrawing any amount or asset for the personal use, it will call the drawings. So guys, for your practice in your homework, you have to pass these practice journal entries. These transactions journal entries you have to pass in your homework. So you can take a screenshot of this, or you can note these 14 entries if you want. Take a screenshot, it is very simple. Guys, are you done with the screenshot? All right. I'm repeating once again, these practice journal entries you have to pass in your homework. You have to pass journal entries in your notebook for these 14 transactions. All right, Mahesh, I am explaining the Yes Bank transaction. The transaction is very simple. Company has taken a loan from Yes Bank of rupees 40,000 and we have received this amount by the check. So as we are receiving the amount by the check, so bank we have to debit here as per the real account golden rule, and we are getting the loan here. So we have to write a ledger by the name loan from Yes Bank. Loan from Yes Bank will be our liability because we are taking the loan. Our liability is increasing here. For that reason, it will get credit. If any liability in a company increase, we have to credit that. Like suppose for example, here is one another transaction for it the same. Like company paid the loan of Yes Bank in cash. Okay, company paid the loan of Yes Bank in cash. Let's say entire amount of loan from Yes Bank. If suppose we have this type of transaction, like company is decreasing the liability now, so what we have to do, we are paying this amount by the cash. Okay, so cash we have to debit, no doubt, sorry, cash we have to credit, no doubt, because cash is going out. But this time loan from Yes Bank ledger we have to debit, because this time our liability is decreasing, and to cash will be the entry. Cash we have to credit here. So if a liability increase, we have to credit that. If a liability decrease, we have to debit that. Simple. You can note these two entries as well. For example, Soumya, you are saying loan is nominal account, then should it be debit? No, loan is not the nominal account. Okay. Nominal account contain only expense and incomes. For us, loan is not an expense and also not an income. We have taken the loan. If you have taken a loan from any person, you have to pay that back. So it is called a liability. Is that clear? All right. But yes, if we are paying any interest on the loan, suppose Yes Bank is charging 12%, whatever the percent interest on this loan amount. So that interest which we pay on that loan, it is called our expense. If we are paying the interest on the loan, it is called the expense. But loan is a liability. All right, guys. So today what we have discussed here, we have discussed the golden rules of accounts. After that, the journal entries we have discussed. And you all have to practice for these journal entries. You have to pass these transactions journal entries in your homework. I hope all things are clear for all of you. If you still have any confusion, you can ask. All right, great. Then guys, that's all for the day. See you in the next session. Bye bye. Take care.